Hey, Dustin Tibbetts here with Passport to Wall Street. Today we want to talk about what do you do when a stock moves against you, right? And I mean really moves against you. Now it depends on where you have your, maybe if you have a profit, right? It depends if you're seeing your profits become erased. And it also depends on if you started the trade and it starts moving against you immediately. So there's a big difference there, so we want to cover a couple different areas of this here for you. So to do that, we're going to actually dive right on over to the charts over here. Now let's say that in example number one, you actually have a profitable position. So I've illustrated there in green. You've got a profitable position and now you see the stock pull back. Well, there's a couple things you can do. You can consider selling the position if you give back so much of your gains. And so a lot of times people will say, hey, if I have a 10% gain up here, if I give any more than 3, 4, 5% back, that's where I'm going to draw the line. Doesn't matter what the stock price does afterwards. I'm only interested in locking in some of my gain, right? You don't like to give back any gain, but you know that that's all a part of the process. Now that's the easiest one to work with, believe it or not, because when you actually have a profit, you don't mind if you have a little less profit. See, when you have a loss, you really mind when you have a bigger loss. So let's just say in this next example that you bought the stock and it starts moving against you immediately. Well, what are you going to do about that since you didn't have a profit? You didn't have a chance for yourself to actually see a gain and then have it erased. Well, in this case, you're always going to start a trade with a stop loss in mind. You're going to have a moment in time where you say, look, if I get this one wrong, so be it. I know I'm going to get some of my trades wrong, but if I get this one wrong, then I'm going to get out at this point. This could be that it's a certain dollar amount. You don't want to lose more than X number of dollars. It could be a percentage, meaning you buy here, and if the stock drops more than 6%, 8%, maybe there's some research that you have that shows that that's a moment where you might want to get out of the trade. In either case, that's where you're going to look to take your stop loss. Now, let's take it a step further. Let's say that you did not take your stop loss, right? You saw it get to that point and you said, well, another 1%, another 2%. I can have a little bit of room there. What do you do if it starts falling sharply? We saw this a lot during the last couple weeks in the month where the markets actually fell rather aggressively. Well, in that case, you may actually be better off by holding the position if you can afford to do so. If you've taken too much risk and, of course, you can't afford to hold it or there's a margin issue there, then, of course, that's different. But if you have a position and you can afford to hold through that, I want you to think of it like this. It's like having a Band-Aid being taken off rather quickly. So this decline here might be totally normal, but when you see the stock drop and literally fall off of a cliff in a waterfall type fashion, a lot of times that's like a Band-Aid being ripped off real quick. Many times you'll actually see the stock recover quite quickly, and a great example would actually be the stock markets right now. Look at the S&P 500, the way it sold off and then sold off aggressively right into the end of the year. What do we have now? We have 8+% gains in pretty much all the markets. If you're watching this after the fact, look at December going into January, and then look at what's happened in the first couple weeks of January. That's, again, because the sell-off was so aggressive, the Band-Aid was ripped off so quickly. If you can kind of grin and bear it and suffer through all that, a lot of times you'll find better prices to get back out for a smaller loss, or maybe even the loss that you should have got out at the first place. You know what I mean? So there you have it. If you have a stock that's moving against you and you're in a profitable position, you should always know ahead of time where you're going to cut it off. We certainly don't want to start a trade, have a 10% gain, give all the 10% back. That doesn't feel good emotionally. You're not going to be comfortable with that type of trading style. So have some rules set in place where if it pulls back and you give back half of your profits or something, you'll allow it so the stock can wiggle around in hopes of a bigger gain. But at that point, you would close it out and say, enough is enough. I can't give you any more room. If you have a stock that you just bought and it fell aggressively, you might want to watch and see if it's a possibility. Do some math and see, could I hold it if it really sold off aggressively here? And if the answer is yes, then you may find that you end up with a smaller loss if you can stick it out. That's not the greatest advice ever, but if you're stuck in one of those positions, it may be a benefit to you. Well, hey, I hope this helps you, and we will talk to you soon.